What is up, future rich bitches? Thank you so much for joining me today. For those of you who are new to my channel, I am Madeline, and today I'm going to talk to you all about how tax brackets actually work. So most people think that like you just look at however much money you make, whatever your salary is for that year, and then you go down the brackets and you say, oh, okay, I'm within that range, so this is my tax rate. But that is just not right at all. And it actually tells you that you're going to be paying way more in taxes than you actually do. So it's super important to understand how this actually works, because you're going to find that taxes just really aren't as bad maybe as you thought. So unlike the bracket thinking that most people have, taxes are actually more like a champagne tower, which is super fun because I love champagne. And so I decided to celebrate in this video with actually not a champagne flute because I don't have any. And I also didn't have any of my trusty Andre on hand that I normally drink, only the classiest for me. So we have sparkling water, but it gets us in the mood. I wore a nice sparkly shirt to, you know, make myself feel like a champagne kind of girl today. So cheers to figuring out how taxes, Okay, hope that's not all smudged up now, but cheers, won't tap the glass again, to figuring out how taxes actually work. So like when you pour champagne into a champagne tower, the champagne fills up the top cup and then the second level of cups and then the third. And that's actually how your tax brackets work. So if you're single, we're going to do all of this as a single person. If you're married, these numbers are a little bit different. All of the concepts are the same, but if you're married and filing jointly, you're going to want to look up the tax brackets. You can go to irs.gov to do that. I will also link that below. And then it will tell you what the actual like ranges and amounts are for you specifically. But today we're going to do a single chick and she's making $50K a year. So that's going to be our example. And if you're looking at the bracket thinking, at a $50,000 salary, she's going to pay a 22% tax rate. And once we go through this champagne method, you're just going to find out that this is so wrong, and it tells you that she's going to end up paying $11,000 in taxes, which is way too high. She doesn't even get close to that. So super important, make sure you listen up. And also, if this helps you understand how tax brackets actually work, make sure to give this video a like, because just like you want to be a rich bitch, I want to be a rich bitch too, and it helps me with the algorithm. Okay, so to understand how you're actually taxed if you're making $50,000 a year, then we need to look at what the first level of cups that you're going to fill up is. So that's going to be your standard deduction. And that's just basically a tax-free income amount. Also, cheers to that. That's just a tax-free amount that the government allots you if you don't itemize your taxes. So for next year, that amount is $12,550, in case you want some specifics. So you deduct that from your salary, and that's going to leave you with the actual amount of money that you will owe taxes on. So after you have your standard deduction out, you filled up cup number 1 in the tower, then you're going to keep pouring and start to fill up the second level of cups in the champagne tower. And this level is going to be the 10% tax rate, and it holds $9,950. So you're going to put $9,950 in that level, and that money will be taxed at 10%. Then you keep pouring, and the next level is a 12% tax rate. And I don't remember the exact amount that that one holds, but you can look up the brackets and do the math. And then you're going to fill that up and keep going, so on and so forth, blah, 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 as you keep getting into the next tax buckets. So then how that works is that only the money that's in that level of cups is taxed at that rate, and then you add all of those levels together, and that gives you your actual dollar value that you're going to end up paying in taxes. Excuse me. The sparkling water is getting to me. So if you are making $50,000 a year, this is actually going to break out to under $5,000 in taxes. So that's less than half of what the bracket thinking got you because you thought that was going to be $11,000 and you actually don't even make it to the 22% tax bracket. So it's a huge difference, the amount that this champagne tower tax method gets you than the typical bracket thinking. And while this should totally be called champagne tower tax rates, it's not. So the technical term for this is a marginal tax rate, and this is how your federal income taxes are determined. So now that you understand this, another thing you might hear people say sometimes, and I've heard a lot, is actually that like someone doesn't want to take a raise because it's going to put them into the next tax bracket and their take-home pay is going to be less because they're in the next tax bracket. So try not to laugh at them and call them an idiot because this is absolutely ridiculous. And now that you know that that is not at all how taxes work, then you can kindly ask them to go for a glass of champagne and, you know, explain to them all of your newfound champagne tower tax knowledge. So how much do you actually end up paying if you do get a raise? So let's say our girl gets a raise. Cheers again to that. And she's now making $60,000 a year. So at $60,000, she is going to now make it into the 22% tax bracket. So she's going to fill up the rest of the 12% cups and then have some spillover into the 22% rung of cups. So after she does that, then her tax bill is going to be around like $6,200 a year, which is about $2,000 higher than the taxes that she paid at $50,000. So while that is definitely like a substantial jump for only a $10,000 increase when you consider that she was making $50,000, that's a 20% increase and a 50% jump in taxes. So definitely more significant, but she still is only going to pay $2,000 of that $10,000 in taxes and have $8,000 more of take-home earnings that she can spend on whatever she wants. So while yes, as you make more money, for sure, more of it is going to go to taxes as it keeps spilling over into those lower levels of your champagne tower. But you're still going to take away a way higher percentage of that as like disposable income. So do not worry. If someone ever tells you that they're not going to take a raise because of taxes, please, please educate them on why that is literally like the stupidest decision they could make. And also, next time you debate tax policy, make sure that the person that you're talking to understands at least how taxes actually work, because I can almost guarantee that they don't. So thanks so much for watching. I really hope this helped you understand how your taxes are calculated. Also helped you understand that you're probably going to end up paying way less in taxes than you thought you were going to. And, you know, maybe help your friends out and spread the knowledge about that, you know, taxes aren't as bad as we all think they are. So thank you so much for watching. Again, if this helped broaden your understanding of how champagne and taxes are kind of similar, please make sure to give me some love with the like button and subscribe to this channel. I release a new video every Saturday so that in just 15 minutes a week, you can improve your financial literacy, change your money mindset, start building wealth, and become a rich bitch. So thank you so much for tuning in. Hope to see you soon. Bye.